Hey, Lou, you can kick out my note taker here. Maybe I can do it from my end, but we don't need that.
Yeah.
If you don't mind kicking it, it would save me some
Okay, I
minutes
think
for
I
the
can
month
take
as
it out.
well.
Welcome, everybody. We're going to start the webinar shortly. Let's see, I think remove. There you go. Okay. Okay, attendees are starting to show up. As I said, we'll start just a couple in 2 minutes after the hour. And just before we officially start, Jeff, where are you calling in from?
I'm in London.
Okay, so thanks for joining us so late. And Eddie, I think it's even later for you.
Yeah, Singapore.
Yeah. And Nick?
Oh, wow.
Based in Miami, Florida, so it's midday over here.
So
Good for you, Eddie. Good
this
for you,
is
Eddie, being
truly
up at this time.
a global call, which makes a lot of sense because it really is a global phenomena.
100%.
Great.
So I'll start with just some formal remarks in just another minute. Okay. Okay. Hello, everyone, and welcome to today's call. Webinar on Bitcoin Treasury strategies. Good afternoon, good morning, good evening, depending on where you are in the world. It's actually quite a global call we have today. I'm Lou Kerner with Crypto Mondays, and we are the largest IRL community in Web3. We have more than 60 active chapters around the world where people come to learn, earn, and connect. And this conference call is and these webinars, and we've done more than 100 of these webinars since we started Crypto Mondays, January 2018, are just an extension of that, where people are coming here to learn. I know I'm super excited to learn from our esteemed guests about Bitcoin Treasury strategies. These, nothing is going up and to the right, I think, in crypto, in Web3, as much as a number of companies that are announced, deployments of Bitcoin Treasury strategies. And, and every time you hear about these, I know I am always thinking of, what is going to be the impact, of all of these, which of these strategies are the best? Is this just the beginning, or are we in a bubble? And and there's so many more questions than that. So I'm super excited for this the call. We've got 3 great experts here, I think, and I've asked all these guys to speak because I've seen stuff they've written. I'm a former Wall Street analyst, and most of the stuff personally that I read in crypto is not so impressive. But each of these guys on our call today, have been out there talking about this, writing about this, and so they've put a lot of time into this, and I'm really feel very lucky that that we're all going to be able to learn from these guys today. So Jeff, Nick, Eddie, thanks a lot for joining us. Each of our guest speakers is going to talk for 8 minutes, thereabouts, and that'll leave the second half of the call for Q&A. So if you've got a question, just raise your hand, and we will bring you up on stage so you can ask the question yourself. And with that, I'm going to stop presenting, and I will turn the floor over to Jeff. I know you didn't have any slides.
No, that's not. Thanks, Lou. I thought I'd just give everyone an update of my latest thoughts on the Bitcoin's Treasury strategies, having published a note on this a couple of weeks ago. It's fair to say the take up on the note.
I'm sorry, Jeff, because I didn't really formally introduce you, so you just want to talk about where you're working.
Of course. So sorry. So my name is Jeff Kendrick. I'm Global Head of Digital Asset Research at Standard Chartered Bank. I have been with the bank about 8 or 9 years now. I came out of macro research and took on the crypto side about 5 or 6 years ago. It's fair to say I've taken it fairly seriously, and thankfully prices have been going higher, so there's been a lot more interest in the space after the disasters of 2022. So very interesting.
And do you still do macro stuff, or is the crypto 100%?
100% crypto now. I was able to get rid of my boring old hat about 12 months ago. So
Congratulations.
fantastic. Thanks, Lou. So on the Bitcoin treasury strategies themselves, I put out a note a few weeks ago, very large take up in the media, and I then updated my spreadsheet today ahead of this call. If I exclude from all companies or listed companies globally, those that are either Bitcoin miners, the exchanges, those that run Bitcoin ATMs, those types of things. So I want to remove the companies that have, let's say, rationale to have Bitcoin on balance sheet. I end up with 65 from the Bitcoin Treasury .net website. And of those 65, obviously MicroStrategy, everyone knows, now called Strategy, is the largest by far, right? So as of today, they hold 592,000 Bitcoins in total. Obviously, they've been accumulating for a long time. The average purchase price for MicroStrategy is 70,000. Yeah, so that gives you your base. Of the others, which I call the MicroStrategy imitators, there's now 64 on that list. And they, as of today, hold 104,000 Bitcoins. Their average purchase price on a mean is about 85,000 per Bitcoin. The median is about 90K, which I'll come back to in a moment. So all of those added together, you're at 696,000 Bitcoins. So that's about 3.5% roughly of all Bitcoins that will ever exist. It's larger than those held by governments. Globally, the government holding is about 527,000, or another 5,000 on top of that if you include what Abu Dhabi holds of the IBET ETF now as a proxy. So very large holdings. As a group, the largest holders, known holders, I should say, like publicly known who they are holders in the world. Now, some people push back and say, well, why do these strategies exist at all? And I think back to the time prior to the US ETFs in January 2024. And before that time, it's fair to say that access to Bitcoin, unless you were quite tech savvy and so you knew how to buy Bitcoin directly, access for a lot of investors was very restricted. Yeah, so prior to ETFs, you had to do some things in stepping out of your comfort zone, buying through names that you may not have heard of before, etc. Right? So access very restricted prior to the ETFs, and as a result of that, it made a lot of sense that investors would purchase MicroStrategy's stock in particular, and have a net asset value greater than 1, i.e., the total market cap of the company traded more than the value of its Bitcoins. Yeah, so that NAV multiple, by the way, was around 1 at the time of the ETF launch last year. It actually went lower for a period, and then through the year last year, it ramped up to a multiple of 3 for MicroStrategy. It's now about 1.5. Yeah, so a lot of topside last year, and it's now settled to a number safely above 1, which I think is reasonable. And the reason I think it can be sustained above 1 is that for now, although in the US, a lot of investors have access because of the ETFs, in the global space, that story is different. So I'm calling in from the UK. I can tell you here, it's still difficult to buy Bitcoin. There was an announcement from the FCA regulator a couple of weeks ago that may change. But as we stand today, it's much easier for someone like myself to buy MicroStrategy stock than it is to invest in Bitcoin directly. And so because of that, I think it makes sense that you have that NAV multiple above 1 in that Bitcoin example. Now, obviously, in the last little while, and particularly in the last couple of months, the imitators have ramped up what they've been doing. Yeah, so only 2 months ago, that number that I mentioned right now for the imitators, it's 104,000 Bitcoins. Only 2 months ago was below 50,000. Yeah, so they've been buying at pace, actually keeping pace in absolute terms what MicroStrategy has been doing, even though the base is much lower for the imitators. Yeah, so a lot of buying, and obviously at less good prices than what MicroStrategy has purchased at. Yeah, so the median, as I mentioned before, I think is the key number there, and that's 90,000. And that means that if we go below 90,000, then half of those imitators, which would be 32 companies, would be underwater on their BTC holdings. Now, that could be fine. They may say that, no problem. Good opportunity to average in. And my forecast is we go to 200K by the end of this year for BTC. So averaging in may not be a bad strategy after all. But if you go significantly below that, again, not my core view, but given how volatile the asset is, has to be taken into account as a possible outcome, then some of those may start to come under pressure. And that's the thing that I think investors need to be, at least at the margin, thinking about as a possible outcome, right? So let's imagine we had some escalation in the Middle East. Well, I think we all know that Bitcoin is not a hedge against geopolitical escalation. Perhaps it could head lower. Again, not my base case, but a probable outcome. If you were to go below 90K, and if you headed 10K or more below that, I suspect some of those that have bought recently may be under pressure. The last point I'll make is that where would that pressure be? The best use case from the past that I was able to find was Core Scientific, which in June 2022 was forced to sell what they had been holding. At that time, I estimate that the price of Bitcoin was 22% below their then cash cost of mining one Bitcoin. So if you go 22% below 90K, that's about 70 in round numbers. That's where I'd expect significant pressure if we were to go there for the imitators themselves. For MicroStrategy, it's probably more like 50,000, given the average purchase price is only 70,000. Yeah, so no real struggle right now. We're at 105K for Bitcoin. This should be fine for now, but I think investors just need to know something around that. Let's call it convexity risk, which is what we'd call it in TradFi space. If you go lower, you could accelerate to the downside and have some risk around those individual companies that have been picking up Bitcoin at less good levels more recently. I'm going to stop there and hand back to you, Lou.
That was great. You really appreciate that. Quickly before I hand it over to Nick, because I felt it really begs the question from what you said, what happened to the market after Core Scientific was forced to dispose of their Bitcoin?
So at that time, it really changed what the Bitcoin miners were doing. So it seems a long time ago now, 2022, thankfully, from a crypto perspective. But at that time, we had in May 22, the Terra Luna collapse. And that's what set off the June selling by Core Scientific. Any Bitcoin miners that have been holding significant amounts and sort of leveraged amounts of Bitcoin then sold for the remainder of 2022. And then obviously in November, we had the FTX debacle, right? So that saw Bitcoin price base around 16K. And then thankfully since then, things have been more constructive. But I guess the point here is what happened then totally unsettled the Bitcoin miners that were over-levered and holding Bitcoins on balance sheet. So that would be, I guess, the example we would potentially be drawing here if prices were to push lower.
Okay, well, thanks for that. And thanks for sticking around for the Q&A. Next, hand it over to Nick.
Awesome. I do have slides here, so bear with me as I try to share my screen.
I've got faith.
You guys able to see my screen?
Yeah, you put it in slideshow mode.
Is it? Oh, I can't see. Do you see the corporate Bitcoin adoption slide right now, or?
Yes, we're seeing it as kind of half of the page.
Okay, let's go full page here.
Maybe it's a PDF and not a slide.
Yeah, it's a PDF.
Okay. No, that's still great. There you go. That's looking good.
Apologies for the confusion. How about now? Is that clear?
Yeah. Yeah.
Okay.
And this was great. This was a piece that, right, you guys put out a few weeks ago.
Yeah, so let me give a little background on myself in the piece. I think that'll be helpful context for this brief presentation here. So like I mentioned before, I'm based in Miami, Florida. Got into the crypto space full-time in the 2020-2021 COVID era. Was working in Deloitte at the time at their consulting practice. Joined the space via Messari. So I was an early analyst on the Messari research team and really helped scale and grow the Messari research team to what it is today, which I consider among the best in the industry. Straddle between what we called our protocol services and our enterprise research lines. So I've done the whole gauntlet of research in this industry. I've worked closely with project teams across a range of market segments and verticals, and I've worked a lot with both liquid and venture funds of the space. Was there for about 3.5 years, and now with Breed VC, as Lou mentioned. So we're an early stage venture fund. We are in the process of closing our second fund and deploying capital right now. We're pretty discretionary in terms of what market verticals we cover. One of those recently being the crypto treasury companies, which brings us to this article. We published this about 2 weeks ago now. It's a pretty quick hitter, but I think does a good job of capturing exactly what is the approach and then some of the pros, cons, and risks of these Bitcoin treasury companies. So to dive into the actual minutia of the report, over the last few years, we have seen the evolution of Bitcoin, right? I think it started in 2021 when El Salvador recognized Bitcoin as legal tender. Then we had kind of the lull of the 2022, 2023 bear market. And that really came to an end with the BlackRock launch of IPod's ETF in 2024. Now we've got a new administration in the US that is pro-crypto, evidenced by the Genius Bill passage in the Senate yesterday. And that has led to us to where we are today, which is the next evolution of the asset, which is corporate adoption. Jeff and I have different numbers for the amount of companies that have Bitcoin on their balance sheet. I think Jeff probably did like a more, he filtered his numbers a little bit. I just took the higher level numbers, right? So what I have here from the BitcoinTreasuries.net website is that as of early June, we have 199 entities that collectively hold 301 million Bitcoin, worth about $315 billion at the time. Among those entities, 147 of them are private and public companies, which account for 1.1 million BTC or $115 billion. So that's where we're at, right? We've got entities now that are adding Bitcoin to their respective balance sheets. As everybody knows, MicroStrategy dominates the Bitcoin treasury adoption game, given for a few reasons, right? I think it's because of their size, their reputation, and their Lindy having been around so long. But there's other companies that hold significant amounts of Bitcoin as well. So these are both private and public companies. These include Block One, which holds 164,000 Bitcoin at the time, Tether, Merrill Holdings, 21, Riot Platforms, Galaxy Digital, and the list goes on. So it's not just strategy. There's a bunch of other companies that hold over 10,000 Bitcoin, and would not be surprised to see that number grow over time. The visual I have here is a chart that allows you to see just how big strategy is to the rest of the participants in this space. So there's a few ways to look at it. You have pure play treasury companies, which we call Bitcoin. I guess the name is still up for debate. We call them Bitcoin holding companies. And then you have other companies that are looking to diversify their balance sheet with additional assets besides cash and treasury bills and gold. For the purposes of this call, we're focusing on the ones that are pure play Bitcoin treasury companies, meaning that the entire goal of the firm is to accrue Bitcoin. Now, the question then begs is, why would you buy that stock instead of actually buying the underlying Bitcoin asset? And the reason for that is what we call an MNAV premium, multiple on net asset value. The MNAV premium can be boiled down to what does the stock trade at relative to the amount of Bitcoin held. So as an example, at the time of writing, Strategy held 580,000 Bitcoin, worth approximately $60 billion. Well, its market cap was at $104 billion at the time, meaning that the MNAV premium for Strategy at the time was 1.7x. Now, Strategy's been along for a while, so we can comfortably say that that 1.7x, call it 1.5 to 2x range, is the gold standard for long-term treasury company MNAVs. Now, as you can see in the chart I have here, there are a range of MNAVs according to the different companies. Now, most of these companies are newer and they have different underlying factors behind them. So you see Metaplanet's got 4.7 MNAV, Summer's got a 1, the blockchain group's got a 4.5. So different reasons for having different MNAVs. But over time, I think it's reasonable to expect that a lot of these MNAVs, these larger MNAVs, will compress to the strategy level if they're going to be sustainable. Now, how do these companies earn their MNAV premium, right? The market just offer an MNAV. They do it a few ways. What we have on this visual is how strategy does it. So they do it through 3 primary ways. They've added a few recently, but we're going to focus on the historical 3 that they've been using, which are convertible debt, stock issuance, and operating cash reinvestment. So you can read it here. I'm not going to go through the details of all of them, but essentially convertible debt is they issue low coupon senior notes that convert to equity only if the share price rises by a predetermined percentage at a given date. So what that enables for strategy is large, low interest borrows while protecting dilution. They do ATM stock issuance, so they maintain an ongoing program where they sell new shares into the market, effectively dollar cost averaging into BTC. And then they have underlying businesses. They have the previous MicroStrategy business that has cash flow that they redirect to buying spot Bitcoin. So who are the players on this, right? As Jeff mentioned, there's a bunch of new companies trying to do this, but here I tried to highlight who are the big ones. Some of these include Metaplanet, which is a Japanese-based holding company that's been on an absolute tear lately. If anyone wants to pull up their stock ticker, it's something to behold. And then, yeah, I've got a bunch of them listed here. I think some notable ones to talk about are 21 Capital, which is the Cantor Equity Partners Tether partnership. The Nakamoto Holdings, which is run by David Bailey and the Bitcoin conference guys. And then you've got GameStop, you've got Trump Media, you've got Strive Asset Management, which is trying to do some cool stuff with buying companies that are trading below their net cash value and converting them into treasury holding companies. So lastly, to wrap this up, how does this all go wrong, right? Everyone kind of always asks about that. I think no one really knows exactly how this is going to play out, but we have some theories, which I tried to illustrate on this chart. So these are kind of called the 7 steps of how this would play out. The price of Bitcoin would drop. The MNAV premium for some of these companies would disappear. As a result of that, they would become unable to refinance their underlying debts. Those debt maturities would approach. They would have a margin call as they have to pay back those debts. As a result, there would be forced Bitcoin liquidations. The price would drop further. There would be market-wide panic, and you'd kind of have a contagion death spiral. Now, people will argue that this will not happen because a lot of these companies are not really taking out debt and they're financing these purchases via ATM stock issuance. But nonetheless, we'll see how it plays out. But these companies are taking out less favorable terms with higher leverage and shorter terms to maturity than strategy. So that's where the underlying risks lies. Yeah, so that's what I got here, guys. I think it's definitely frothy, but we're far from over in this. I only talked about Bitcoin here, but there's an ETH one now with SBET. There's the Sol Gen over DeFi Dev Corp one. There's some other ones that are percolating in the background. I went to a dinner last night here in Miami, and I'd say that's far from over in terms of the corporate strategy, treasury holding companies that are going to come to market. So we'll see where it goes. I think Bitcoin's probably the safest one to play, but nonetheless, exciting to see financial engineering and craziness in these markets. So yeah, appreciate that.
Okay, terrific. Thanks, Nick. And now we'll finish with Eddy.
Yes, thank you, Lou. Well, it's great because the former 2 speakers have actually planted a good, can say, landscape for me because, first of all, Coinsilium is actually, the shares are trading in the UK on AQUIS. The ticker symbol is Coin. So maybe Jeff or maybe Nick has heard about us. And we have also a dual listing on the OTCQB under CINGF. And yes, we are one of the followers of MicroStrategy. And to be honest, I don't mind being called a kind of a newcomer because we have been listed for 10 years doing investing in blockchain. So I'm quite happy that we are among the new, the new companies doing this in this space. So let me just share a quick presentation. Let me see. Okay. Okay, I will try this. Okay, sorry, I need to allow the sharing. Okay, I may not be able to share. I'm sorry about that, but I will run you through.
You want to send it to me and I can share it?
Yes, maybe because I'm not set up. I think it's a new machine, so I'm not set up. Let me just send it to you quickly. Sorry about that. Okay, I've sent it. So while you receive it, just let me give you a bit of background. So I'm in Bitcoin since end of 2012, 2013. I was involved more, on a full-time basis. And at the time, we started a Bitcoin startup incubator. And then in 2014, met with Malcolm Pale, current chairman of Coinsilium, and we wanted to list the company on a stock exchange, and that's what happened in December 2015. So we have been in this space for a long time, and we started as investors in the space, and then throughout the different cycles, we have also been quite active as advisors and venture builders. But our experience of being listed goes back to end of 2015. And the interesting thing is that the presentation that we created in May, a lot of things have happened since then. So here you have our main company, so Coinsilium, and Forza is a 100% owned subsidiary in Gibraltar. And this is a company we actually renamed because we already had it in Gibraltar, but we renamed and dedicated to the Bitcoin Treasury strategy. Yeah, so we have the disclaimer. This is a team. So is Malcolm Pale, executive chairman, is British but based in Gibraltar now. I'm French, based in Singapore, and then we have other team members here who are very helpful. So this is something, yeah, we can spend a little bit of time. So this is something I think Geoff mentioned as well. UK is a bit special because UK had a ban of ETFs, and then, as you were saying, Geoff, they recently authorized crypto ETNs, but ETFs are not available to retail investors. So there is apparently a demand for access to Bitcoin on public markets, similar to what you have in the US with ETFs. And so apparently, what we do, what Forza does on the market, on AQUIS stock exchange, and what other companies are doing as well, we're not the only ones doing this, has been met with quite a lot of demand, a big demand from the market. And so far, we have been very successful with this new strategy. So, as I was saying, we have a Gibraltar-owned company. We can go to the next slide. Yes, so we recognize Bitcoin as an emerging treasury reserve asset. And obviously, having been in the space for a long time, we have gone through all the phases of evolution of Bitcoin, from being an asset that no one really wanted in the early days, to something that has gone up not only in price but also in interest by even nation states, like you were saying, Nick, I also believe that the El Salvador stance has been quite a pivot in the history of Bitcoin. So we can move up, please, Lou. So this is a question that has been partly answered as well. So why not just buy Bitcoin? I think it's very interesting. I think these Bitcoin treasury companies are offering some flexibility, and of course, in certain countries like the UK, there is a tax advantage because they have specific tax schemes. So having shares is easier than having crypto in terms of taxes. It helps with that. We have seen that as well with MetaPlanet that was mentioned in Japan. Apparently, is much the tax is much lower on gains on shares than on gains on Bitcoin. So that makes a big difference, obviously, to the retail market. And as was said before, obviously, you need a bit of technical background if you just want to buy Bitcoin out of an exchange. So that's Forza. As I was saying, this is our Bitcoin treasury company, which is a fully owned subsidiary. So we're a little bit of data, and funnily enough, in 1 month things change a lot. So for example, in the next slide, Lou, we can see MicroStrategy and MetaPlanet, but MicroStrategy already have much more Bitcoin. Same for MetaPlanet. Their share price has changed, obviously. What is interesting, I can give you a few some data about our raises. So on the back of this presentation in May or mid-May, on the 15th, we raised first about $2 million, 1.5 million pounds, 3 pence a share. Then we raised 2 weeks later, $4.3 million at about 6 pence a share. And a few days ago, we raised another $5.4 million at 22.2 pence a share. So we had this phenomenon of being able to raise more and more and being able to buy more and more Bitcoin as well. We're still in the early stages, of course, whereby we have less than 40 Bitcoin at the moment in Forza. And we have, as you were saying, Nick, we have quite a high MNAV because we are in the early stages of development here. But so far, everything has gone to plan, and we look forward to continuing to this process. So the next slides. So this is something that because we have been investing in different companies. This is one of our investments, Automato. We were thinking we were going to use Automato is like a AI agent that helps users trade on DeFi platforms. So we were thinking about trying to generate some yield related to the Bitcoin. But to be honest, we're going to wait to have a certain scale. We're going to test that a lot. So this will come in a later phase of our development. For the moment, we are in the process of acquiring more and more Bitcoin, raising more funds, and also no debt as well. So just raising by selling shares. Yes. So we can move a bit further, Lou, please. Yes, next one. This is still Automato, which is one of our investments. Yeah, here. So we can stop here. So in January of this year, we appointed James Van Straten, who is a senior Bitcoin analyst at CoinDesk. And unfortunately, he's at the conference. Otherwise, he would have been happy to join us as well. And he has a great insight in the space. And he has been very helpful in helping us with the strategy around Forza, and he's still very actively involved in our operations. And Clément is a co-founder of Automato, was also a strategic advisor. This is a partnership we have had now for almost 2 years now. When Shift Happens, it's a podcast, interviews a lot of the main players in the world of crypto, and now we are doing a Bitcoin bulletin, a bi-weekly Bitcoin bulletin with When Shift Happens. Yeah. And so we started that about a week ago, and these are other partners for the media. So this is our share tickers. As I was saying, CINGF on OTCQB and Coin in the UK. Yes, so this is the main, let's say, pre-Bitcoin treasury activities. So we've been investing now for 10 years in this space. And we also have been generating income through advisory. And there we just show a few of our portfolio highlights, which is the next slide. Interesting thing is that this can be very complementary of what we do now. And as well, if we have successful exits with these companies, with these startups, some of them are more mature, or if they, for example, issue tokens later, then obviously it can fit into our, we can buy more Bitcoin basically, thanks to that, or it can cover our expenses, which at the end of the day enables us to buy more Bitcoin. So this is the information that we had in early May. And as I was saying, actually our share price now is closer to 39p. So there's been a great 30 plus days for us. That's Malcolm's contact and my contact, and happy to take questions as well.
So what's your market cap now?
132 million pounds.
And do you have a sense of who's acquiring? Until a minute, I can stop sharing.
Yes, because in England, actually, our market, AQUIS, is very much a broker and market maker centric type of exchange. So when we do the raise, we usually see either we do what we call a wrap, which is a retail offer, and that we see, let's say, the platforms. So that's more retail oriented. We see the platforms, that are used for traders or for shareholders to buy shares. Otherwise, if it's a placing, then obviously we can see the funds or the brokers that are coming in, and it's getting more institutional. There is more institutional demand, and we have, I think,
the people who have bought it so far have to be happy.
Yes, yeah, definitely. And I think in May we have been the second largest traded share on the stock exchange. So
wow.
Yeah.
Well, super interesting. I've got some more questions, but we can start taking them from the audience. If you've got a question, raise your hand, and I will bring you on stage so you can ask the question yourself. And the first question here is from Courage. Kimber. Let's see. Promoting you to panelist. Got your camera on? Because you have to accept it. So you should have a thing that allows you, well, or if you just want to do audio, feel free to just do audio. Okay. With Courage, you can continue to figure it out. As the invite is open, we'll move on to the next question from Michael Kennedy. And Michael, you've been promoted to panelist. Or you should be. Not quite sure why the promoting to panelist is not working. We've got a number of questions now. I'll see if anybody else can be promoted to panelist. Yeah, Michael declined. Okay, the other Michael is going to be joined in.
Yes, can I speak now?
There you go, Michael. Yes. Okay, it is.
Thank you for the awesome presentation. I wanted to find out, in terms of like treasury management strategies, is there some strategy you're looking at, or do you just buy and hold the assets?
So let's see. You want to start off, Jeff? Did you understand the question?
It's probably an Eddy question, actually. I think
Yeah.
How are you going to go from 30 something Bitcoins to 100 Bitcoins, I guess, Eddy? That's the question for you.
Yes. Okay. Yes, I think I understood the question. Michael, you were saying, is there a specific strategy? So as Nick was saying, in the US, there are a bit more options. MicroStrategy has used, different methods, different financial engineering methods. It's a bit more complicated at the moment in the UK because, for example, AQUIS Exchange doesn't have a bonds market. Of course, we could use, or companies like us could use convertible debt. We haven't done. We have just been basically raising on two levels. I was saying either directly to retail or through this winter flood retail offer that exists in the UK, or through placings from brokers. At the moment, these are the only solutions we're using. So I would say there are other strategies which are probably a bit more complex in other exchanges, in other markets, but we haven't experienced those yet. Obviously, we're looking at what can be done, compliance with, of course, regulations in the UK.
That answer your question, Michael?
Yes, it does. Thank you.
Okay, terrific. Thanks. Let's see. Next question come from Ben. Bring you up on stage. All right. I just have to unmute.
Hi, thank you so much for your presentation. Very inspiring. I'd like to ask Eddy, what common mistakes do you see early stage crypto projects make in custody and institutional readiness?
Okay, so when you say crypto project, you don't mean just Bitcoin treasury companies. You mean any kind of crypto projects, right?
Yes.
Okay. Well, I mean, crypto projects usually have all the challenges that tech startups have. So obviously, but of course, but you're right, there is a layer which is specific to crypto. I mean, from the very early days, the most problematic layer has been regulations. It has been unclear, as we know, what we call regulatory uncertainty for a lot of these startups to evolve in. But if you want to talk about, for example, custody, well, today, most of the time, they would probably outsource or, find a service provider, hopefully a serious service providers in that space. So I would say today the market has matured a lot, so you have a lot of big players. I'm not sure exactly what you mean by institutional readiness. Do you mean institutional readiness in actually holding crypto or managing crypto?
Yes. Like accepting that crypto. Yeah.
Accepting crypto. Yes, I mean, again, fortunately today there are many big players out there that can help a lot of companies, startups, institutions to accept crypto, either turn it into fiat currencies, sending on bank accounts, or maybe even actually keeping this in crypto, and they can as well become maybe smaller Bitcoin treasury companies or digital asset treasury companies. So I think it's much easier today, to be honest. It was more of a hurdle a few years back, but I think today the sector is mature enough. Yeah.
I have another question for Nick. What does a compliance-ready protocol look like from a VC lens? Thank you so much, Eddy, for your contribution. That was wonderful to hear from someone like you. And thank you. And for Nick, what does a compliance-ready protocol look like from a VC lens? Is optional transparency enough?
I think that's a great question, and there's really no concrete answer as to what a compliance-ready protocol from an institutional investor's lens is. I can tell you some things that we generally look for, but there's no, call it magic recipe that every project needs to meet. So a few of those things include, first and foremost, the team, right? Like, who are the founders? Where are they based? Are there any red flags in their background? That's just kind of the bare minimum, right? Obviously, we look for exceptional founders and great things they've done, but to hit the compliance bucket, we just want to make sure that everything is kosher from the founder side. On top of that, you've got the legal and regulatory side. So what type of project are you working with? Does the project fall into the regulatory, call it rules of the US or whatever market they're operating from? As you know, as an example, the US doesn't offer access to perpetual swaps for most crypto projects at this point. So that's something that we would look at. I think that's changing now, obviously, with Coinbase offering perps. But another thing we would look at, yeah, I guess this would be the minimum, right? You know, we'd obviously want to have our legal team review the contract and kind of the underlying documents with them. But in terms of project compliance, the founder, the laws of the given jurisdiction, and the project type would be the big things we'd look at.
Oh, okay. Okay.
Okay,
Thank you
thanks.
so much.
Okay, next question's from Russell.
I think you're mute.
Yep.
There you go. Thank you very much. Yeah, my question is really around MNAV. Trying to understand and get my head around the difference between different companies. When you've got somebody like Semler, where their Bitcoin, the value of the Bitcoin seems to be 1-for-1 with the value of the company, and then you've got Coinsilium, the new company. I think you said you had 40 Bitcoin worth about £3 million, and the market cap is 140.
Less than 40. Yeah. Less than 40.
Yeah. So the difference is so vast, and it's trying to get my head around what is driving that MNAV. What's the reason why Semler is valued at the same value as their Bitcoin, despite the fact they're an operating company? And is being an operating company a negative? So it's a question on how to value these companies based on an MNAV. When you saw the chart that you put up earlier, where you had some at 4.5, some at 1. I think strategy is 1.5, something like that. So what's driving it? What's the cause?
For us, what I can say is it looks like to be, I mean, in very simple terms and kind of feels obvious, but demand for the shares is driving it, obviously. But it looks to us, because we have been starting raising for about a month now. It looks to us that it's linked to the stage at which the company is. So, for example, there are other companies that you can look at in terms of the progress, and over the certain period, and I guess Nick and Jeff may have seen that as well. The MNAV starts going lower, and obviously as they buy more and more Bitcoin, but the companies have to raise more and more, and so it seems that mechanically the MNAV start going down. But again, we are at the very early stage. It seems to me that we are following on the path of similar companies before, to be honest. Maybe Jeff or Nick can
Yeah, I might
reply as well.
I might just add a little bit. So the problem here is we're kind of comparing apples with oranges, right? It's one of the issues. So the Eddy's point about the early startups is right. So it makes sense that, I mean, I even joked a moment ago that Eddy's probably going to get to 100 Bitcoins, and presumably that's even the base, right? So when you start small, it's easy to ramp up. So it makes sense that the multiple is higher, kind of like early stage tech stocks have higher PEs. Yeah, so think of it kind of like that. Eventually, they will have like some mature versions of the story. So I know if, let's say, Metaplanet in 12 months from now could be relatively mature, and then you can compare it against MicroStrategy's NAV multiple. My guess today would be the Metaplanet one would remain higher than the MicroStrategy's NAV multiple because of the point I was making earlier about investor access, which is very easy in the US and is, let's say, marginally more tricky in Japan, right? So I think you'll end up with the ability to compare based on local regulatory or other blockers. But again, right now it's apples versus oranges, which makes it a bit tricky.
Okay, makes sense. Yep. Thanks. I don't know that. I think that answers it pretty well. You've
Okay.
got strategy operating. So yeah, sorry, Lou, off you go.
Thanks, Russell. Nick, I don't know if you had anything you wanted to add to that.
Yeah, I'd agree with everything everyone said. I think Jeff brings up a good point about kind of like the regulatory arbitrage that these companies enable to access Bitcoin would usually would be unable to. I would say, to answer your question a little more pointed, Russell, it really comes down to the operating teams and the narrative in the market in the long term, right? So new companies will launch and they'll have a premium on their NNAV, because they're new and they're hot. But over time, right, as I showed on the slides, I think it's reasonable to assume most companies. Let me backtrack. Strategy at a 1.7x MNAV right now is the gold standard you want to meet over time. My guess would be over time, most companies would go back to their NAV, right? Because I don't think there's that much space or demand in the market for these multiple MNAVs. I think only a handful of companies over time will have what we call that MNAV premium, and I think those companies will be able to do so because of superior management teams and some, call it, narratives that retail or institutions can get behind. So those are the two things that I think drive MNAV in the long term.
And narrative being distinctly different than strategy.
Yeah, I mean, look, so Metaplanet, right? You can call it like the Japanese strategy. They've got very low real interest rates in Japan, so they can really just offer unlimited debt and continue buying Bitcoin out there, which is what enables them. Nakamoto, which is the David Bailey Bitcoin conference play, what they're doing is they are going to be, call it the head of the pyramid, where you're going to have a bunch of sub Nakamoto treasury companies in small jurisdictions around the world, and they're going to all roll up to the Nakamoto play. So that's kind of their unique spin on it, right? And that's what I mean when I talk about a narrative behind their respective project over time.
Okay, cool. Thank you. Thanks for the question, Russell. Roman, got the next question?
Hey, Lou. Hey, guys. Thanks for doing this. Yeah, I just had a question about, so we've seen this kind of Bitcoin Treasury public company narrative develop. I was wondering if there's any viable path for private companies to kind of tap into this, let's call it rinse and repeat, right? Buy Bitcoin, issue shares or debt, and then buy more Bitcoin. So yeah, just wondering, aside from, obviously, crypto startups holding some of their regular treasuries in Bitcoin, if there's a way to tap into this a bit more in the way that some of these public companies are doing.
Well, I think there may be. I think maybe there is not a model that I've seen so far, because obviously the public companies have the advantage that you have a share price that is changing every day, every minute, really. So you have this dynamic that is very interesting for the market, and I would say that it's a very interesting added layer to, we're not on a Bitcoin treasury company. You don't need to focus just on the Bitcoin price. You obviously have a new metric, which is the share price, and then you have all these metrics that Nick and Jeff were mentioning, the MNAV, then you have days to cover. I mean, it can get quite complex. So I think a lot of people are attracted by this as well, the fact that there are some interesting dynamics here. So in the case of a private company, if you remove that layer, because obviously a private company share price only moves at very scattered, like liquidity events of a certain type, then that would be the challenge, is to make it exciting, or to make it. I think for a private company, basically the asset price is going to be really the main drive, and obviously any private company that bought Bitcoin 10 years ago, 5 years ago, would do very well today in terms of valuation because of these assets. So we're going back to kind of the basic valuation of the asset, I guess. But there may be a model where something a bit more imaginative can be created around that. I haven't seen it yet, so.
Yeah, my guess would be, for the most part, no, Roman, unless something new comes up, like Eddy said, right? There's a reason most of these Treasury holding companies are going public. They're going public through a variety of manners, right? Like you've got these pipes and these reverse mergers, or you just have pure strategy pivots from these public companies, but they're overwhelmingly public. I guess in theory, you could take out debt to buy more Bitcoin for these companies, but that would be setting themselves up for absolute disaster. The majority of these are financed via stock dilution. So, yeah, most of them are going to be done via public companies. It's I don't know how a private company would do it other than taking out massive amounts of debt.
Okay. Thanks, Roman.
Thanks, guys.
Okay, well, we're almost at the top of the hour, so I'm going to take one last quick question, and that's, if we're meeting, have this call again in a year, what do you think we'll be talking about in a year with regards to, Bitcoin treasury strategies that we're not talking about today? And I'll start with you, Eddy.
Well, I mean, the trend seems to be that there are going to be many more Bitcoin treasuries companies, and as Nick was saying as well, many other digital asset possibly. Obviously, we think Bitcoin is the safest and the most resilient out there. I think what we don't have today is that kind of ecosystem, and we don't have yet all these companies competing. We don't have we don't have like certain models have not been experienced yet. And of course, 1 year from now, Bitcoin itself, Bitcoin price, and the Bitcoin ecosystem itself will make a huge difference. So I'm obviously optimistic. I've been in this space for a long time. We've gone through hypes and we've gone through crypto winters.
Yeah,
and I'm optimistic. I mean, I think what MicroStrategy has done is tells a lot, because he has stayed very much on course for a long time.
definitely.
So
Okay, well,
yeah.
terrific. Thanks for that, Nick.
Yeah, 1 year from now, a few predictions. I think we'll see most of these newcomers. I think we'll see the pace of launches slow down. I think we'll see new assets launching, especially long tail crypto assets. So we've got predominantly Bitcoin ones right now. We've got SBET with ETH. We've got a few Solana ones. I think we'll see more assets launching, more vehicles, but that'll get really frothy and top out pretty soon. I think we'll see the premiums compress for some of these older ones significantly, to the point where most trade at NAV, and then the market will determine who the winners are. I think you can make some educated guesses as to who those are going to be, but you'll have a handful of pretty strong winners a year from now. And I think you'll see minimal, call it forced selling from these companies in the near term, if Bitcoin doesn't absolutely just roll over and die in the next year. In the scenario that does happen, right, I think what we'll do is we'll see consolidation in the space. We'll see strategy. We'll see counter equity partners. We'll see the bigger, more well-capitalized ones just buy these companies up and become even larger. So that's the way I see it playing out when the death spiral inevitably begins.
Thanks, Nick. And Jeff, you get the last word.
Well, my published forecast is that Bitcoin will be about 250K by this time next year. So if that's the case, I'll be very upset with myself personally that I didn't buy more of Eddy's Coinsilium stock on the London Stock Exchange.
Okay.
I like the answer.
Well, thanks for that, Jeff. Thanks, Nick. Thanks, Eddy. Thanks for everybody showing up. It was a great call.
Thank you. Thank you.
Pleasure.
Thank you, everyone.